time lapse?
Yep.
Nice.
Okay.
All right, we'll just do a little test in the chat here. Let me know in the chat if you could hear the audio. Over the past couple live streams, we've had some issues. So just give me a thumbs up in the chat if you guys can hear. And if so, we'll get started. All right, it looks like we're all good. All right, well, good evening, everybody, and welcome back to Walks and Wall Street. Today is October 26, 2023, and it is 9:19 p.m. Eastern Time here live from New York City. We are sitting on the corner of East 23rd Street and Broadway. We are quite literally right outside of the Flatiron Building. I'll quickly adjust the camera so you guys can see. Starting the stream on 23rd Street today. Now, there is a lot to talk about. I feel like every single stream has been a very, very action-packed live stream this week, particularly because of all of the earnings reports that have been coming by. I think it'd be appropriate just to quickly cover the Magnificent Seven. Okay, as we know today, Amazon reported earnings, really crushing it, beating on both the top and the bottom line, but I think it's appropriate that we quickly review all of the other mega cap tech stocks earnings reports, particularly as it relates to profitability, because that's really all we care about, right? Not all we care about, but a big portion. So let's just talk about profits for a moment, and I think if we conceptualize it like this, it's pretty eye-opening. Let's start off with Tesla. Tesla recorded a net income of $1.85 billion this quarter alone. We'll move on to Alphabet, or Google. Recorded a net income or a net profit of $19.6 billion. Microsoft, ticker symbol MFST, recorded a net profit or net income of $22.3 billion. And Meta, who we heard from yesterday, $11.6 billion profit last quarter. That was up over right about 200% year over year. The same quarter last year, Meta reported about $4.4 billion worth of net income. So, I mean, just really, kind of crazy if you think about those profit numbers. Now, the star of the show today was Amazon. They beat on both the top and the bottom line. On an earnings per share basis, get this, many Wall Street analysts were expecting 58 cents worth of EPS. They crushed it. Came in at 94 cents worth of earnings per share. Revenue also beat, coming in at $143.1 billion. Incredible. Wall Street analysts were expecting $141 billion. So big beat there. Now, I know, we're going to get to it. We're going to talk about Amazon Web Services. Pretty good numbers, but it did miss the mark a little bit. Not by much. Analysts were expecting $23.2 billion worth of revenue for Amazon Web Services, which is the cloud computing division of Amazon. They came in at 23.1. So, not too much. Now, where they crushed it which is totally surprising to me, I had to do a double take on these numbers, is the advertising revenue. Now, Meta also crushed it with advertising revenue. We'll talk about that in a minute. But advertising revenue at Amazon came in at $12.1 billion. Wall Street expectations were 11.6. Just a really, really amazing quarter. Absolutely robust. But let's talk about profitability. Net income more than tripled. I'll say that again. Net income or profitability more than tripled on a year-over-year basis. Amazon made $9.9 billion in Q3. That translates to about 94 cents a share. That is up from $2.9 billion in the same quarter last year, so Q3 2022. Roughly translates to about 28 cents worth of EPS. Pretty crazy, right? However, the net income for the quarter does include pre-tax valuation gain of about $1.2 billion from the company's investment in Rivian. And I'm sure we all know who Rivian is, right? The EV competitor to Tesla. So still, all right, even if you want to get a little bit critical here and say, all right, about $1.2 billion of that net income was from their investment appreciating, right, the pre-tax valuation gain in Rivian, still made $7 billion. Seems pretty good to me. I don't know. What do you guys think? Now, let's conclude this. Well, actually, we can't conclude this, and I'll tell you why. So the vast majority of mega cap tech stocks did report earnings, but we are still missing two companies. And number one, that is I'd say probably the most anticipated company, is Apple. Tim Cook's company, ticker symbol AAPL. Now, Apple is going to be probably the most anticipated company this earnings season because if you think about the S&P 500, it is a market capitalization weighted index. And Apple makes up over 7% of the entire index, which is absolutely just nuts. So November 2nd, Apple is going to be reporting earnings. And then to round out the Magnificent Seven, we also need to hear from NVIDIA, who will be reporting on November 21st, 2023. So far we've had Tesla, Alphabet, Microsoft, Meta, and Amazon. I'd say out of all of those corporate earnings for those big tech companies, I'd say the most disappointing was Tesla, and the most upbeat is either between Microsoft or Meta, I think. Well, I take that back. We'll throw Meta out of there because they lost about they're continuously burning tons of cash. They are burning about $3 billion a quarter on the metaverse, or as they call it, Reality Labs. So I'll replace that with Amazon. Now, everybody in the chat, I do have a quick announcement. I want everybody to check their emails if you haven't done so already. Go ahead and check your email because right at around 6:30 p.m. Eastern today, I sent out our second copy of our dedicated research here on Walks on Wall Street. So if you scan the QR code on your screen, it is going to take you to our latest research report, our latest newsletter, and it is titled, I was thinking for a title of the newsletter, it's titled Return to Pre-Pandemic Norms in the Worst Way Possible. And I sort of wrote about bank earnings season, particularly I got really, really granular with the delinquency rates as it relates to credit cards. We also talked about the Russell 2000 as it relates to their exposure to long-duration debt and adjustable rate debt. Not a lot of people talk about this, but we did a deep dive analysis. So if you want to receive all of our research every other Thursday after the market closes, just go ahead, scan the QR code on your screen. It's completely free, or you could type !news, N-E-W-S, in the chat, and the Nightbot will drop the link to the Behind the Street newsletter. I want to make it very easy to read. I want to compartmentalize a lot of the concepts in here, and I've also added in some video. So let me know what you guys think of the format. Does it read well? Does it not read well? Is it choppy? I migrated to Substack recently because we can upload not only video in 4K, but a lot of the infographics and the charts that I post will all be in 4K as well. So I want to make sure it's coming across as best as possible. All right, guys, let's go ahead, close up the laptop here. I'm going to say hello to everybody in the chat. Hopefully you are all having a fantastic Thursday. It's already Friday tomorrow. Very excited, very happy about that. So give me a moment. I'm going to close up the laptop. I'm going to get off the filthy, disgusting New York City floor, and we will get rocking and rolling here on Amazon earnings night. Thank you. All right, let's get going. Sorry about that. It's the time of year, everybody, and I think a lot of New Yorkers are going to resonate with this, but not only New Yorkers, people from the Northeast in general. Again, I'll take the QR code down, but if you scan the QR code, you'll be taken to the link from our latest newsletter. But I think a lot of New Yorkers can resonate with this. It's the time of year where you wake up and it's cold. You got to put on a jacket before you go outside, particularly if you're commuting to work at 7 o'clock, 8 o'clock in the morning. But throughout the day, it gets kind of hot. I think it was almost 70 degrees in the city. So I knew I had to do something. I wanted to do this for you guys, and I completely just totally botched it and forgot. So I was watching an amazing interview that I've watched many, many times before. Does anybody listen to the Dave Rubenstein podcast? Well, about 4 years ago, he was interviewing Jeff Bezos. At the time, Jeff Bezos was the CEO of Amazon. He is no longer, right? It's now Andy Jassy. But Jeff Bezos said something really incredible that resonated with me last night, and I wanted to share this with you guys today. And one of the things that Jeff Bezos said is oftentimes when he was the CEO of Amazon, he would, after the earnings call, the big managing directors and Wall Street bigwigs, those analysts would come up to him and they'd say, "Hey Jeff, really, really great quarter, congratulations on it." And Jeff Bezos says that when he was getting complimented on the quarter, he would think to himself, he's like, that quarter I was working on 3-4 years ago. He's like, so when Amazon reports results, that's all outdated to him. He's like, the work that we're doing now and the products and services we're building now are going to show up on our financial earnings and our results in 5 years' time, because we play the long game. And he was equating that story to when, Amazon stock almost went bankrupt, right? The company almost went bankrupt in the tech and telecom boom and bust in the 2000s, right? The stock dropped 90%. And he's like, our stock price kept going down and down and down and down, but all of our internal metrics of the company kept going up, right? Average daily users, average daily site visits, revenue metrics, profitability metrics, gross margin metrics. He's like, so it really goes to show, if you want to run a profitable business over the long term, he's like, you need to be willing to compromise and upset Wall Street in the short term so you could really build something and reward investors in the long term. Because a big criticism right now of companies, that choose to go public is that once you go public, you're essentially at every waking call to Wall Street. Every quarter, they want more profits. Every quarter, they want, to show all the metrics that are ticking the boxes. And oftentimes, companies being under that pressure, they could do things in the short term just to appease Wall Street that will not necessarily be the best thing for the company in the long term, if that makes sense. And Jeff Bezos, in this interview, he was talking about how he always went against the grain and just reinvested everything in the business, and was unprofitable for a long time. And now, they are a huge, huge moneymaker. So if you want to check out that interview, definitely do it. It's well worth it. It's kind of like a free MBA all in one. Jen Claus is here. What's up? Good to see you. Sparks Carnival says Alphabet is down 10% for the week. Revenue growth in its cloud units slowed from 28% in Q2 to 22%. Yeah, I still think the quarter was very upbeat and positive in my eyes. What I'm excited about, and we sort of talked about this last night, Google's cloud unit, called Google Cloud, for a long time, right? Not up until recently, it didn't generate any profits. And now it has positive operating profitability for the cloud unit. And that's only going to continue to grow and expand. So look, I think that if you believe the narrative and if you believe the story that AI, machine learning, artificial intelligence is the future, and that there's going to be more products and services, there's going to be new, better technologies coming out, you probably want to have at least some exposure to one of the main infrastructure plays. And when I mean infrastructure plays, I mean Google Cloud, Microsoft Azure, AWS, or maybe even an Oracle. You kind of need to at least have some exposure to that infrastructure, so to speak. Hey, Robert is here. What's up? Good to see you. Thanks for joining us. Welcome, welcome. Michael, what's up? Debbie, good to see you. Hey, RPTs is excellent newsletter, Tom. Nicely done. I appreciate that. Thank you so much. Hopefully you like the new format. We've now migrated to Substack. So now a lot of the infographics that I put in there should be able to show up in 4K, and the video should be able to show up in 4K too. And I'm trying to make it fun, easy to read. I used a movie reference in there, so hopefully you guys are enjoying that. But guys, more importantly, right, kind of selfishly enough, this is West 26th Street and Broadway. And this is what I was telling you guys about quite some time ago. The city is trying to make the city more walkable, more pedestrian friendly, adding more bike lanes. And if you notice, this whole entire stretch here, going all the way from 32nd Street, which is Koreatown, right, Korea Way, all the way here to 25th Street, there's all outdoor dining, dedicated walking space, dedicated pedestrian space, and outdoor dining space for the restaurants. And I think it gives it a very European look, more of a laid-back, relaxed European vibe. And I think I like it much better. Now, this caused a major stir in New York City. A lot of people didn't want this, which is just beyond me. I think it makes the neighborhood look so much better, look so much more inviting, and it's more fun. I don't think we need all of these cars jammed, right down Broadway here. I think it looks so much better like this. I don't know, any thoughts? It makes the city more inviting when you have all of the additional outdoor seating, I should say. Hey, Paul says, hey guys, it's been a while. Hey, thank you so much. Paul, it's good to see you as always. I trust you've been well. All right, we'll get one more look from the north-facing side. Now it's almost November, but it's about 70 degrees out today in New York City. Everybody's really enjoying it because guess what? Winter's just around the corner. Sparks Carnival says gives the neighborhood more personality and character, more of a unique experience. I definitely agree. Couldn't agree more. Yeah, Kessa M says, yeah, it does make the city more lively. This gelato place is always packed here. Karina Thompson, what's up? Debbie Tucker says, Tom, I like it. And you're right, it does look more inviting. Hawaii says, is that 32nd Street and Broadway? Yeah, so it starts at 32nd Street, which is considered Korea Way, right? That's the start of Koreatown. And it'll go all the way down to Madison Square Park. But we are now on 26th Street and Broadway. But this, yeah, you're right, Hawaii, it'll go all the way up to Koreatown. I think it looks amazing. It looks great. Hey, Joseph Hardaway is here, what's up? TB says, hey Tom, I was in Manhattan 1 week ago, and I'm now in Tokyo. Unfortunately, New York City is not my favorite city anymore. You should visit Japan. You know, I really want to visit Japan. What do you like the most about Tokyo, if you had to name one thing? Is it the cleanliness? Is it the public transportation? What is it? Because I have a lot of friends from Korea, I have a lot of friends from Japan, and they say very similar things. One of my good buddies from Japan, the first time he came to New York City, he was kind of almost appalled by just how dirty the subways were in comparison to what they are in Japan, right? Now, I've never been to Japan, but from what I hear, the transportation systems are very modern. They're very safe, and it's very clean. Here's another thing one of my Korean friends sent me the other day. Did you know at the bus stops in some select locations in Korea, particularly in Seoul, they have outdoor wireless charging stations at the bus stops? That would never be possible here. It would be totally blown out and destroyed in a matter of days. So yeah, it's a very futuristic city, it's very cool, but I just think being in reality here in New York City, I don't think any of that would ever jive here. This is the Smith restaurant across the street. It's okay. They do have another location up by Lincoln Center, 66th Street and Broadway, I believe, or 60th and Broadway. Hey, marketing videography says people wait in line for Subway in Seoul. It's very wonderful. Sharon says, Tom, you would really love Japan. Wendy says, I've been, it's very, very clean. Hey, Chris Mills, what's up? Michael Vosper says Japan is very, very clean. Yeah, I think it just has to do with the culture there. Maybe the politics, I don't know. But I think it mostly has to do with cultural norms. Particularly in Korea. One of my good friends is Korean. And she says there's virtually no homeless population in Korea, mainly because in Korean tradition, the Western culture, particularly in the United States, is more individualism, right? Individual rights, you know, it's sort of like you eat what you kill, you do everything yourself. But in Korean culture, it's kind of the opposite. It's a very, very big forefront on taking care of your elders and respecting your elders. So family units are generally always together. It's not as split up and bifurcated as it is in the United States. And families tend to live together, even late into their life. So it's very different. It's an interesting culture. All right, guys, this is the brand new Ritz Carlton, West 28th Street and Broadway. This is an incredible building. Let's cross and let's look at the lobby. I tried to take you guys here the other day, but it was pouring, raining out. Hey, Zach Wolf, what's up? Good to see you. So you have the train station right here, the NW train, 28th Street. And then right after here, and then right here you have the entrance to the brand new Ritz Carlton, which is really nice. Now 50 Central Park South is the other Ritz Carlton that's right on 6th Avenue. So there's the Ritz Carlton Hotel and Residences, 50 Central Park South. And I think I showed you guys one of the apartments there that just went under contract. But this is a new one, looks really good. They keep it very clean here, there's lots of security, it seems very lively. I would assume lots of business travel is picking up in New York City. Yeah, Desi says, Tom, the Flatiron building will now be condominiums. I heard that. I think it's going to be a mix between condos and hotel units too. I think. Hey, George Romano says, money never sleeps. What's up, George? Jeffrey, good to see you. RB says, good evening, Tom and all. What's up, RB? We're just checking out the Ritz Carlton and talking about Amazon's earnings today. Blew it out of the water. Now, if you notice something, I'll key you guys in on a little secret here. You notice how right outside of 432 Park Avenue, we always start the live stream in the public park here? So if developers allocate a space and they maintain it, right? It's on them to maintain the space, the public space. They get a little bit of a tax break, right? So, you know, for example, has anybody been inside the Trump Tower on 5th Avenue, right on 57th Street? The atrium is a public space. It's open to the public. Adjacent from that I believe connects the IBM building, that's also public space. It's open at 10 p.m. But at 432 Park Avenue, the closer you go to the Park Avenue side as opposed to the Madison Avenue side, they have a 24/7 public park that is really, really beautiful. They have tables, they have chairs. The entire walkway is completely marble. You can see down into the art gallery. It's really nice, but it's kind of a way to get a little bit of a tax break there. So. All right, let's continue up Broadway, but I think this is a new Mediterranean restaurant. And the bar looks really interesting. It kind of looks like a waterfall. I'll show you guys. See, if you look inside the bar, it resembles a wave, which is really nice. It's cool. I've never been in here, but every time we walk past it, it is packed. I'm not sure if you could see inside the restaurant, but there is not a table to be had. Every table is filled. And the bar actually looks pretty packed too. We'll go check it out. I think this place is about a year old. Very unique design. And then, as you're sitting down eating your dinner or enjoying your drink after work, look at that. You have probably one of the best views of the Empire State Building anywhere in the city, which is amazing. Hey, Goldies, as if this was asked, I apologize. Why are the like numbers jumbled? And the watching numbers also jumbled? I don't know what you're really talking about. I don't know what you mean. All right, let's continue up here. This is West 29th Street. We'll take a walk through Koreatown. But yeah, for those of you who are just joining, the biggest story of today is Amazon. Amazon reported earnings that smashed expectations, blew it out of the water, beating on both the top and the bottom line. And Amazon Web Services continues to grow as the demand for AI and cloud computing grow. I think that total addressable market is ever expanding. And that's why I think it's appropriate to have at least one of the main infrastructure plays in your portfolio. Now, if you own the S&P 500, you already have automatic exposure. And this week alone, about 30% of the entire market cap of the S&P 500 reported earnings. And there's only a handful of stocks, right? Now, November 2nd, which, funny enough, is the day after the conclusion of the Federal Open Market Committee meeting. So from October 31st through November 1st, Jerome Powell and all his friends are going to be meeting at the FOMC. And this is when they're going to make the decision for updated monetary policy. Now, if you look at futures right now, the likelihood of an interest rate hike is very low. The bond market is predicting a pause yet again. But if I had to make a guess, your guess is as good as mine, my guess is as good as yours. Before the end of the year, I think we're going to get at least one more rate hike in the form of 25 basis points. This is the brand new Virgin Hotel that just opened up. So if I had to make a prediction, the end of the year, 2023, going into 2024, the Fed funds target rate is probably going to be 5.5 to 5.75% to end the year. And the reason why I think that, well, a multitude of reasons why I think that, but there was another data point that came out today that sort of increases my likelihood for success. Does anybody want to take a guess at what major piece of economic data came out today that the Federal Reserve is probably looking at and saying, hey, guess what? We're probably going to need to be higher for longer here. This is an interesting reflection of the Empire State Building on the glass of the Virgin Hotel. That is so unique. And I believe there's a pool on the roof here too. Hey, Colton Manning, what's up? Good to see you. Hill says, what is your take on NVIDIA? I think they're reporting, when is NVIDIA reporting? All the way at the end of November? Yeah, Howard Buck, you're right, 4.9% GDP number, a good number. Bingo, Howard. Now, you got to understand something. When we cover all of these economic indicators, leading economic indicators, we talk about the Institute for Supply Management's PMI numbers, we talk about existing home sales, new home sales, all the leading economic indicators, the coincident economic indicators and the lagging economic indicators. The Federal Reserve is looking at all of the same data. All of the same data we're looking at, the Fed looks at. And if the goal of the Federal Reserve, right, and as we know from last week, Fed Chair Jerome Powell was right here in New York at the Economic Club of New York, and he was giving a speech and he said the following. He says, we continue to be resilient in our approach to get inflation back down to the 2% target at all costs. Well, the last CPI report we got, inflation came in at 3.7%, and now we get a GDP number that is way above economists' expectations. So if you're the Federal Reserve Chairman, Jerome Powell, and you see all of these numbers, you see inflation continuing to come in hot, you see gross domestic product or GDP for the United States, coming in at almost 5%. And your job as a Federal Reserve Chairman, particularly in this instance, is to cool the economy, slow the pace of the economy. Well, are you going to even have an idea in your mind to ease up on your quantitative tightening cycle and go to quantitative easing? Not a chance. And that's why I'm a little bit perplexed with some of the analysis coming out of major investment banks, particularly Goldman Sachs, right? There's some very well-known economists at Goldman Sachs that are predicting rate cuts as soon as Q1 of 2024. Guys, that's now. That's like, well, technically not now, but that's like now, okay? It's already the end of the year. November is next week. Q1 starts, January 1st. I'm just not seeing it. I think we're going to continue to see this environment of tighter monetary conditions for longer, higher interest rates for longer, until you have some of that data, getting back down to the Federal Reserve's target. Not to mention, unemployment is still at some of the lowest levels it's ever been in US history. If you think back to the speech that New York Fed President John Williams gave, this was about 6 months ago. His take is that there shouldn't be any talks or consideration of easing monetary conditions until unemployment in the United States, this is a beautiful dog, until unemployment in the United States hits 5%. I don't know. What do you guys think? Hey, BNB 420s as we held at 5% in Canada this week. I saw that. Now, usually the way it works is global central banks will follow the lead of the United States. So in the United States, we have the Federal Reserve, right? Fed Chair Jerome Powell. And usually all of the other central banks follow in the footsteps of our Fed. And there's multiple reasons for that. Mainly because if they don't, right, their native currencies will get absolutely slaughtered and crushed. I think with an exception of Japan, right? I mean, think about what's been going on with the BOJ, the Bank of Japan. As the world has been tightening, right, as global central banks have been tightening monetary policy, Japan has been doing the opposite, right, the exact opposite. Japan still has negative interest rates and they're still printing a ton of money and buying bonds and buying equities, but technically you're not allowed to say that. Hey, good to see you. Technically you're not allowed to say that, but hey, Buy the Books has got the email, Tom, thank you. Hey, thank you. What did you think about it? Let me know what you think of the new format. Hey, Mark Anthony says, can you talk about end-phase earnings? The clean energy stocks have been significantly hit due to increased interest rates. I wasn't on the call. I haven't been following, I've been very preoccupied with mega cap tech earnings. I don't even know what Enphase reported. Did they report today? Now, I am interested in a lot of those solar companies. And I believe I was actually long Enphase at one point in 2020. But I'm just not too sure how they reported earnings today. Sparks Carnival says 2023 has been a horrible year for the automobile sector. Sparks Carnival, I got to send you this Barron's article that came out earlier, that came out Sunday. And they interviewed an equity research firm here in New York that did a historical case study of all bear markets going back to the 50s. And what they found is that as economies go in recessions, obviously there's specific sectors that do better than others, but usually, according to their research, the number one sector that leads an economy into recession is automotives. They made a really compelling case for that. I was going to throw it in this week's newsletter, I just didn't have enough space for it. But I guess it kind of makes sense, right? Because as you have a transition in the business cycle, what do people usually have a hierarchy of what they pay. And, well, I really wish I could just send you the link to the article. I forgot to program it in the Nightbot, but we are seeing an explosion in delinquencies on auto loans and auto payments. And I think that makes sense because the average auto payment now is like not around $900. And I can't even really get my head around that. But it makes sense, right? I mean, if a car is 60, 70 grand and interest rates have nearly tripled, well, do the math, right? Kind of makes sense that the auto payment would be about $900. Yeah, B&B 420 says car and truck prices are insane the last few years. Yeah, I mean, you know, like let's talk about the action in the equity market first, and then we'll talk about the action in the debt market. So we had another big sell-off in the S&P 500 today. If you look at the percentage of stocks in the S&P 500 that are trading at or above its 200-day moving average, it's only about 27% of stocks. So the overall breadth of the market is so poor, so poor. And the S&P 500 sold off yet again in very, very high volume, slicing through the 200-day, but now it's about 8% extended to the downside from the 50. So this is territory here where if you are short this market, I would start to either unwind that, right? I can't tell anybody what to do. This is just an open discussion here. But there's a high likelihood with this level of extension, I mean, you could have like a very ferocious snapback rally to the 50 in a very, very short amount of time. And we I talked about this, I wrote about this in the newsletter. If you haven't received it, just check your email. I sent it out to everybody at around 6:30 p.m. But if you scan the QR code, it'll take you to our latest research piece and newsletter. And it sort of outlines a few things, right? The percentage of stocks trading below the 200-day moving average on the S&P 500, but the relative impact that interest rates are having on small cap stocks relative to larger cap stocks. And it mainly has to do with, number one, operating income, cash and liquidity. If you take a company like Apple, like Microsoft, like Meta, that has massive amounts of cash on the balance sheet, well, the higher interest rate environment is not going to hurt them as much as it would hurt a smaller cap company in the Russell 2000 that has very, very, very small operating margins and operating income and profitability. Because smaller cap companies, a larger portion of their earnings goes towards debt servicing. And there was an interesting piece by Bank of America Research that came out. I think it was something over 20% of all the debt held by Russell 2000 companies are adjustable rates. And there's a massive wave of that long-term debt coming due over the next 4 years for Russell 2000 companies. And the S&P 500, it's a little bit more manageable, it's a little bit more staggered. So if these smaller cap companies want to borrow money, right, to pay their employees, to pay their operations, and to help them continue to grow, they're going to have to pay significantly higher interest rates, and I think that's going to lead to severe earnings recession in the Russell 2000 that we're seeing, and even bankruptcies, right? And I wrote a piece. I got access to my friend's S&P Global Market account, and I gave all of you the bankruptcy statistics going back to the great financial crisis. That you got to look at. The bankruptcies for 2023 have now annexed all of the bankruptcy filings over the past 2 years, 2021 and 2022. So if you want to read that, once again, go check it out. This is a really good view of Madison Square Garden here and Hudson Yards in the distance. I love the pink color. We'll go past Billy Joel. Maybe we'll check out the Hudson Yards. But yet again, if you want to read that, once again, scan the QR code, punch in your email, and you will be signed up to receive our newsletter for free, and you could read the latest copy that I emailed all of you at 6 o'clock this afternoon. I know Hawaii says I love the color. I love it too. I wonder what the reasoning is. Usually it matches the Empire State Building, but the Empire is lit up in a really bright blue color tonight. And I'm not too sure why, but it looks great. Hey, Alexander Fitzgerald, says Tom, is that Madison Square Garden? It is. And this is so funny. I was just about to say, and I really want to see a Rangers game. This is going to be my 2024 goal, everybody. My 2024 goal, I'm going to go see a Rangers game. I've never been to a Rangers game, and I'm from New York. That's a travesty. I don't really like hockey, but watching hockey live must be insane, right? It's a very brutal, very violent sport. And in my opinion, right, this may be a controversial take, I think the most in shape and fit athletes, it's number one is hockey, in my opinion, and number two is soccer, right? I'm a little bit biased because I played soccer pretty much my entire life throughout college. But yeah, I think hockey is definitely takes the most physical fitness. Number one, you're on ice, okay? So you have to control your balance. You're on skates, the sharp, like extremely sharp blades, and you have about 10 other people trying to clock you into boards while you're chasing around a little puck. So I find that very impressive. I know Roberts is not many obese hockey players. Optimus 17 says, yes, Tom, hockey players need fitness, strength, endurance, and agility. Noah says, I think soccer is number one. Yeah, I think, I mean, I'll agree with you. I'm a soccer player, so I'm down to agree. But it's not as physical as hockey, right? I've never gotten a tooth knocked out. I've gotten a concussion before. The only sports injury I've ever gotten, and thank God, knock on wood, I've never broken a bone.
Gotta go up some. So hurry up, man.
It was, it was in one of my soccer games. We were playing a college called William Patterson University. I'm not sure if anybody's heard of it. I think they're in New Jersey. Beautiful campus, by the way. That was arguably one of the most beautiful campuses I've been on. Love William Patterson. I slammed my head on the goalpost going for a diving header, and I got a concussion from that. Anyway, look at how gorgeous this is, guys. This is the Moynihan Train Hall. I wish we could give you guys a walking tour inside, but the internet is so horrible. Hey, Mothman, Michael Joseph, what's up? Now, this little section of the city, I don't know what the heck went wrong, but it's always really dirty here. There's like this big bus operation here. All right, so here is a better view of the beautiful Madison Square Garden. But if you guys are enjoying the live stream so far tonight, feel free to leave a like on the video and click the subscribe button if you're new. We do these streams almost every day starting at 8:30. We'd love to have you along for the ride. Robert says it looks like San Francisco here. I don't know if that's meant to be a good or a bad thing. Hey, NBA Elias says Stanley Cup is the toughest trophy in sports to win. Michael Joseph says, news tonight, USA conducted airstrikes on Iranian militants in Syria. The market is hitting the brakes hard. Yeah, just these endless, I don't want to get political, but the endless wars is just exhausting. It's just exhausting, man. But, I don't want to get too conspiracy. It drives economic growth. That's what keeps the economy going. It's horrible to say, but, it's horrible. It's all a political game fueling the military-industrial complex. Yeah, cultivating it's a business. It is, and it's a sick business. But hey, Ronix, thank you so much for your $10 donation. I appreciate it very much. Thank you for supporting the channel. I appreciate it. Now, we won't go full on conspiracy, but I follow one rule. This is the one rule I follow. And if you follow this rule, it'll always lead you to the answer. Every time, without fail. And the question is, I'm following. It's just follow the money. That's it, just follow the money. If you ask yourself that question, it'll lead you to all of the answers, right? Just follow the money. I know, 5-5er. Now, didn't Mbappe get paid like $1 billion from the Saudi government to play soccer over in Saudi Arabia for 1 year? I mean, God bless him. I mean, he deserves it. But wow, that is crazy. I think same thing with Cristiano Ronaldo too. Hey, Nako says thank you for the email. Great content. Kind of scary stuff. Yeah, I mean, look, when the piece I wrote, talking about getting back to pre-pandemic trend, 3% delinquency is not the end of the world, but it's just, I think we need to follow the trend that this shows, right? The conclusion is that this shows that all of the monetary and fiscal stimulus that was hammered into the economy, right, due to the big C, is starting to wane a little bit. We had some of the lowest credit card delinquencies ever in the United States in 2021 because, government was, you got your Trump bucks, you got your Biden bucks, right? Everybody was paying down their debt. So, but look, when good times are here, people spend, right? It's sort of that theory we talked about, I think about maybe 2 months ago now. Lifestyle creep theory. But thank you for reading it. I appreciate it. This is an amazing shot. Check that out, everybody. Is that not an unbelievable shot of the Empire State Building? Hey, Jules, spot on, Tom. You are very clued up for sure. Great newsletter. Thank you so much, Jules. Jules, you know what I'm trying to get into? Or I should say get better at? I'm trying to become a better golfer. I really, really want to become a better golfer. but I am not a good golfer at all. I'm just not. And I think it all comes down to patience, right? I think it all comes down to patience because I'm so used to being in a hectic environment where everything is go, 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 go all the time. And golf is really about picking and choosing your spots, being more relaxed, being a little bit more calculated. So I can't focus. Halfway through, I'm just totally checked out. So I want to become a better golfer. Do we have any golfers in the chat? I know that Golf Endeavor, big golfer. Hey, NBA Elias is basically many things in the economy are returning to normal. Lower interest rates in the long term are unsustainable. I agree. Now, NBA Elias, did you see the Howard Marks interview? And essentially his thesis is that we are going to be forced back into a artificially suppressed interest rate environment just because Western nations aren't, it's just not going to be sustainable for Western nations to have these elevated interest rates. They're not going to be able to pay their debt obligations, right? And it's funny because this essentially was caused by free money, by cheap money. And you know, the reason why the United States is in the position we are now is because we have the world's reserve currency. And that is a very, very, very powerful position to be in because if the vast majority of transactions around the world happen in dollars, well, guess what? You can issue as many of them as you want. You can print as much money as you want. You essentially have an unlimited checkbook, right? And I think it's going to stay that way for some time. There's been so much, you know, back and forth about, you know, BRICS, all of the other nations like China, you know, want to get off of the US dollar. It just doesn't show up in the data. It just doesn't show up in the data. What does show up in the data is the following. I'm sure all of you have seen these, you know, fear-induced, you know, YouTube videos of the world is de-dollarizing nobody's going to use the US dollar anymore and it's all going to come crashing down. They never cite any data. They have no source. If they actually looked at the primary source in the data, you would know that just last quarter, there has never been more transaction volume in US dollars in world history than there was last quarter. I'll say that again, and you could look this up for yourself. Last quarter was the largest quarter for global transactions in US dollars. So if anything, it's the exact opposite of what many people are saying. They're like, the US dollar is going to be dethroned as the world reserve currency. If anything, people are using it more. Now, I'm saying this from a point of, look, it's not like I'm rooting that, hey, you know, US dollar has to be the world's reserve currency. But that's just the truth. And also, have you ever heard of the theory, the grass isn't always greener on the other side? Many people are talking about, you know, particularly China as this big economic powerhouse, and they are, right? The Chinese economy is you know, very big and large, and so is the Indian economy. And I'm more bullish on India than any other emerging market. But everybody has problems, guys. Okay? I think a lot of the perma bears out there will say, oh, the USA is going into terminal decline and everybody else is doing great. If the USA goes into terminal decline, guess what? The world is going to be in a world of hurt, like beyond belief. And economies have grown so big in scale and in size that we are all interconnected. If the United States goes into a spiraling, crippling recession, do you really think that's what China wants? Again, ask yourself the question, follow the money. Of course not. They make all of the products and services that they sell to us. If Americans aren't buying Chinese goods and services, what does that mean for unemployment in China? What does that mean for manufacturing capacity in China? We are the largest purchaser of Chinese goods and services. So we're all interconnected. So I think I would just ask myself, follow the money. And I think as an American investor, I don't want to see China or India go into a massive spiraling recession. That's going to hurt us, right? That's going to hurt our economy, right? I don't want Japan, Korea, Saudi Arabia to go into a spiraling economic recession and depression. That's going to hurt us too. So I think it's more interconnected than you think. All right, this is an amazing shot. Look at that, guys. Isn't that gorgeous? Yeah, WP and China have a big chunk of US debt in their hands. Look at that. So for all of you who don't know, we are now in the Hudson Yards development of New York City. It is right behind the Moynihan Train Hall, and you have a direct view of the Empire State Building. Imagine working in one of these towers and having that view. It's really just amazing. I know Richard's a spectacular view. It's really stunning. And you know, it kind of makes sense because one of the things that we've been talking about as it relates to commercial real estate, many big corporations have been moving out of older buildings in Manhattan and coming to the Hudson Yards. For example, I think the most recent example, we may have talked about it, we may not have talked about it, is EY. I believe they used to be in 5 Times Square, and they have now vacated and followed KPMG, the other major consulting firm, to the Hudson Yards, and I could see why, right? Imagine, okay, I'll ask the question to the chat. Imagine if you're an employee of EY, and you have to commute to Times Square every day, through Times Square, all of that stuff. So have that visual in your mind. Now, look where we are right now. Would you rather work, live, and play in Times Square? Or would you rather be right here with gorgeous views of the Empire State Building? Everything seems to be super clean, everything is modern, there's security, there's restaurants, there's a Whole Foods. I mean, the choice is really obvious. I mean, look at how immaculate they keep this place. There's a reason why BlackRock is now at the Hudson Yards too. Yeah, Lady Cerritos is the Peloton, and Whole Foods, it must be a nice neighborhood. I know, Hawaii is the latter 1000%. It's just nicer here. It's more modern, it's new, and it's closer to transportation. You're right here at Penn Station, 34th Street. Now, speaking of new, what we're looking at right now is the brand new $50 million Highline extension connector. This is actually made out of wood, guys. I know, NBA lies, I agree. This is the brand new Moynihan extension to the Highline. This just opened. The project cost about $50 million, and over the summer they had a big grand opening here with the governor, Kathy Hochul, and it connects all the way to this amazing patio here, and it has direct entrance to the Whole Foods. I'll show you. Now, it's obviously dead right now because it's almost 11 o'clock at night, but during the day, this place is really, really busy with, you know, employees. It's really nice. And look at the Whole Foods, all brand new. And over there is where the High Line starts. Hey, Austin City Limits, what's up? Hey, JAC. This is how does it work when people write their cars off for the taxes? Well, if you own a small business or you're a business owner and you're using your vehicle for work purposes, you could take a deduction. But you obviously have to make sure you're using the vehicle for work purposes. You can't just be joyriding around, you know, with your friends. All right, everybody, check this out. This is the new paddle court here. Not to be confused with pickleball. Nakos says, Tom, you still eyeballing the Tesla? I am still eyeballing the Tesla, absolutely. And you know, I think the stars are going to align here, guys. What do we learn from Tesla's earnings report that was actually very disappointing? I think we're going to see more price declines on Tesla models, which is good for future Tesla buyers like me, maybe. I'd say I'd probably get a Tesla within the next 5 years. Not anytime soon, but you know, by that time, maybe the Tesla Model X will be about, you know, $20,000 less than it is right now. It's almost just cool to sit up here and people watch these people playing paddleball here. Now, it's not pickleball, it's something else. I believe the game is quite literally called paddle. It seems like they invent a new game every day. I know, Dan Sang says, Tom, by that time there's going to be so many more EV options from you. You know, I think that I'm just a Tesla maximalist, and I don't know if that's ever going to change. Oh, Dan, I was going to ask you. So obviously Amazon reported earnings today, and their Rivian investment contributed about $1.6 billion to their net income. So Rivian is another competitor to Tesla, but I'm just not sure about it. I'm not sold on it. The features of Tesla is just kind of amazing. I don't know. I mean, I'll tell you this. If I buy a vehicle, it's 100% going to be an EV. That's sort of my take. All right, let's go down the stairs here. I mean, what about you guys? Anybody in the chat have an interesting EV they have? Maybe like a Tesla Plaid or something like that? Hey, Fox Paper says, hey, I've started watching your nightly streams, and I'm curious about what camera do you use? So we use an iPhone 13 mini, and we have it attached to a gimbal. But thank you so much for watching. We appreciate it. Green Star TV says Tesla truck. Emmanuel says Lucid is prettier than a Tesla. I mean, they do look good. I'm not sure. You've probably seen some of our Miami live streams. As you walk through Brickell, they have the Lucid Motors showroom right below the Apple Store. Looks really nice. Hey, the Flag Film says I have a 2020 Audi Q5 hybrid. Wow. How do you like it? How many miles to the gallon does that get? I also think Porsche came out with that all-electric, what is it called? The Panamera, something like that? I don't know, I'm not a car person, but somebody on Central Park South has that car and we always pass it on the stream. That thing is crazy. NBA Elias says, Tom, any plans to take a tour of the... I didn't even know about that. Where is it, by the way? The flag film says, I'm loving it, and it averages 45 to 60 miles per gallon. That's good. Nice. Oh, someone says, I think it's a Taycan. I got it. Green Star TV says, yeah, Porsche's great EVs. Now, I will tell you one of my concerns about Tesla. And the concern just happened recently. So I've been spending more time in Red Hook, Brooklyn, just because I'm working on a big project there. We're trying to sell the Conover, 199 Conover Street. We just put 2 units in contract, so that's good. So fingers crossed that that'll close before the end of the month. Those are 2 pretty big deals. It's about $3.5 million we have in contract right now. But I've been I've been walking past the Tesla service center in Red Hook, and there's always a line out the door, always. Now, I don't think that's good news because it's a service center. So I think that must mean there's like faulty, the cars need to be serviced, they need to be fixed. So I don't know. Maybe I'll have to ask somebody why there's always a line out the door. Today there was a huge line. I was in Red Hook today. I promise you, all the way down the block, line for the Tesla service center. Oh wow, NBA Elias, 66 Hudson Boulevard. Maybe we'll have to check that out tomorrow. I'm absolutely interested in that. Now just imagine the battery technology that's going to be available in 2030. Like, that's what I'm excited about. Imagine the range on your average run-of-the-mill EV in 2030. It's going to be insane. It's going to be sick. You're going to be able to probably go all the way across the country with maybe 1 or 2 charges. That's my prediction. I think by the year 2030, if you have an EV, you will be able to go across the entire continental United States on 1 or 2 charges. Noah says, what was the Hudson Yards like before? I'll show you. There's still remnants of the old Hudson Yards. It was mainly a train center for the MTA, the Long Island Railroad. It's called the West Side Yards. And the surrounding area was very industrial. There was a lot of auto mechanic shops, a lot of construction, very, very industrial. There was none of this. All these luxury condos, nothing like this. Way, way back in the day, when I was a freshman in college, I think this was 2014, so 1,000 years ago, there was the only drive-through McDonald's in Manhattan, right on the corner here. And I remember I didn't want to spend the $2 to take the subway to class. So I would walk to the McDonald's here. I would get like a biscuit or something like that, and then I'd walk all the way to class at 59th Street, John Jay College of Criminal Justice. And none of these buildings were here. You could see on the left-hand side, guys, this is the Jacob Javits Center. And you see all of these luxury condominiums surrounding it. None of this stuff was here. This building is 5 Hudson Yards. This is luxury condos and also the Equinox Hotel. So the gym Equinox, they have their own hotel. It's a 5-star hotel. I believe room rates start at about $900 a night, probably even more expensive now that Airbnb is banned. So the hotel mafia is going to be able to fleece the consumers even harder now. And this is the vessel. So to the left is the vessel, to the right is the shed. This building can actually move, it's on wheels. So it can retract in and out, depending on if there's any events or anything like that. I don't know, what do you guys think of the Hudson Yards? Thumbs down, thumbs up. Some people think it's too futuristic. Some people like it, some people don't. Let me know what you think in the comments. Ooh, I think they got the Rangers game here. Oh no, it's the Buffalo Bills. All right, perfect. Because I was going to take a drink of water. So we'll have a football intermission, okay? All right, I gotta get some water, so you guys enjoy the game, all right? We'll be back.
There's a great look at it right here. When he keeps it up.
Barely, but clearly. Second and 10. Mayfield in trouble again. Buys room. Takes it out close to the 10-yard line. Third down.
And the combination there of the coverage downfield, there's nowhere to go in football. Second play in a row, and eventually that pressure gets to him. At least he was able to roll out of there and at least get some positive yards. Gives him at least a chance here on third down.
All right, we're back.
Stepping up, firing. Oh, knocked down, almost picked. Boyer was right there, came close, but broke it up anyway, fourth down. So a very fast 3 and out.
And Boyer's been doing this on third down. This time he's actually back in the city. He's been lining up a lot.
Yeah, this place is cool.
All he's doing is feeling Baker Mayfield and seeing that crosser. Throw it to him, steps in front. Baker looked very hesitant, very indecisive. Boy, did Boyer come close to a pick six there.
Jake Kamarnik came into the game leading the league in gross punting average since 2009. He's averaged 50.4 tonight.
This is really cool, guys.
And this one is a beauty to the 26-yard line.
They have chairs just set up here, so anybody could watch the game.
The flag is Deontay Hardy, 63-yard kick. And the Bills are moving
Turn to
back.
return, holding, receiving team number 39. That's a 10-yard penalty from the spot of the foul. First down, timeout.
12:58 left in regulation. Bills on that point to the 10.
All right, let's continue to explore. I know Carol Brown says, yes, it is. You can watch the games outside. Really cool. Yeah, that's amazing. And everything is so clean. They're actually putting up the Christmas lights, guys. You see this? Keith says, careful, you'll get in trouble with the NFL. Nah, Roger Goodell can give me a call. He knows who I am. All right, this is the Equinox Hotel. It's the front entrance. All right, this is a cool view, guys. Look at that. There's a pool on the roof deck here too. It's an outdoor pool. I think it's open all year round because it's heated. Let's check out Black Rock. We haven't walked past Black Rock in a while. I think if Roger Goodell bans walks on Wall Street, I think there's going to be some serious uprising. You can't ban us, Roger Goodell. I don't think he'd do that. We come in peace, we mean well. All right, here's another good shot. Oh my God, look at this shot. You have the full moon here in contrast to all the new buildings. I know, marketing videography, and this is another cool reason to move to the Hudson Yards. There's just so many cool things coming here. So many cool things. Now, the downside is it's a little bit far away. It is a little bit far away, and during the winter, it is very, very cold here and very, very windy at the Hudson Yards. Extremely windy and extremely cold, but during the winter, the summer, and the fall, during the fall, the spring, and the summer, it's very nice. You can see the Empire State Building all the way in the back. I believe there's an Australian coffee shop here called Bluestone Lane. This place is actually pretty good. Anybody has ever been here, Bluestone Lane? I think this is an Australian chain. Green Star says the wind was extremely horrible in the financial district too. Oh my God, man, I know. It's, so my old office was 82 Wall Street, which now doesn't even exist, by the way. That office building is now the Wall Street Hotel. That is now the Wall Street Hotel. And wow, in the winters, getting off the 2 train at the Wall Street station and walking to the office, oh my God. The wind is so punishing, okay? Particularly as you come up on Water Street. It's, I think for people who've worked in Lower Manhattan, you know exactly what I'm talking about. It's like punishing wind and very, very cold. But here's the flip side of that argument, right? During the summer, there's no place like being by the South Street Seaport, having amazing views of the Brooklyn Bridge, being able to eat lunch outside. It's amazing. It's just, you know, we live in the Northeast, and we got to deal with what we got to deal with, I guess. Hey, Latha, what's up? This is Tom is out late on a school night. Indeed, we are. We started late. We started the stream late. We were about 30 minutes late. Had a busy day today. I was all over the city. Oh, I do. Dan Sang says, Tom, do you know a good diner in Manhattan? I was at a diner last night very late. This is the diner I used to go to all the time when I was in college. Now, it's not like good food, but you go there for the diner experience. It's called The Flame Diner. I believe it's 59th Street and 9th. It's pretty much right on the campus of John Jay College. And it's open 24/7, 365. Great diner. However, to talk about inflation, guys, I remember I would go to that diner, right, when I was a college kid. And I would get, you know, an omelet or pancakes, hot coffee, and I'd walk out of there paying $15. Does anybody want to guess? Does anybody want to take a guess what the bill was yesterday at the Flame Diner for an omelet, a side of sausage and hash browns with a decaf coffee, I mean, your jaw is going to completely fall off. I will warn you that. Does anybody want to take a guess of what it was? $40 on the money, Noah. $40 on the money. Damn, that was a good guess. $40 on the money, and then I had to, obviously I got to tip the guy. So it was like 47 bucks to eat at a diner. Dude, that's not sustainable. That's to the point where it's just absolutely ridiculous. So this is 50 Hudson Yards. Look at how beautiful the lobby is. Isn't that crazy, guys? I swear to God. Now, I'm not complaining about the business. I'm not complaining about the Flame Diner. They got to do what they got to do to survive and stay in business. I get that. Totally get it. Inflation is crushing everybody. But, when you think about going to a diner, just getting an omelet, maybe a side and a coffee, you think, all right, 15 bucks, maybe I'll leave it 20 just with the tip. Guys, you're gonna, imagine a family, right, taking your family out just to a diner in New York City now. That could potentially be a $300 ordeal. That's insanity. I can't even believe that, but it's true. It's crazy. I know, NBA Live says that's like eating at an airport restaurant. It is. Because like everything on the menu is 20 bucks. Everything on the menu is like 8 or 20 bucks now. Crazy. Joe says Denny was $2.99 for the Grand Slam. Well, I think Denny's is still reasonable. I still go to Denny's when I'm in Florida sometimes. Denny's is publicly traded, ticker symbol DENN, I believe. They have a good CEO, very good corporate governance there. Michael Joseph says Chelsea has good diners too. What do you recommend? Any specific? All right, I think we covered a lot. We talked about Amazon's earnings. Did we talk about the GDP print today? I forget. Well, anyway, we might as well cover it again as we head back into Midtown Manhattan. GDP came in hot, 4.9%. And I think that's pretty much going to be a lock for at least one more interest rate hike before the end of the year. I think it's pretty much a lock. Now again, November 1st, 2023, which is next week, kind of crazy to think that, but it is. That's the next FOMC meeting, next Federal Open Market Committee meeting, where the Fed will give an update to their monetary policy. I think after the higher than expected inflation report for CPI, and now this gangbuster, blow your brains out of the back of your skull GDP report, I think there's a high probability that we're going to get one more hike before the end of the year. M3 TVs is when I arrived to New York City during my trip there. I will splurge at a McDonald's in Manhattan. It's more expensive there than, say, the Bronx. So for me, that is splurging. That's fun. That's cool. You don't need to have that much money to have a good time in Manhattan. There's so many free things to do. There's so many activities. Right? Think about the activity we just walked past a few moments ago. You could watch the Bills game outside in Hudson Yards for free. Go to the CVS, get a couple sodas, and you could have yourself a good time. There's a lot of free activities. You don't need to spend a lot of money. So, even if you just go to McDonald's, get yourself a nice lunch, walk around the city, enjoy the sights. There's nothing wrong with that. That's a good time. To the right is the Accenture. They moved here too. Speaking of hockey, the NHL moved here as well. So I think the NHL's headquarters is right here. Oh, you know what else we didn't cover that I forgot? I mean, it's just been so many companies reporting. Visa. And we talked about payment processing a little bit 2 live streams ago. How it's just such a ridiculously profitable business. The gross margins are insane. And Visa is raising their prices. So they're going to make even more money. And what I fear is that every time you go out to eat, you're going to continue to see those convenience fees. Anybody see those? If you pay with the credit card at a restaurant, they'll say, hey, if you're going to pay with the credit card, you are going to be charged a 5% convenience fee. It's not a convenience fee. They're just trying to cover the cost of the payment processing for, Visa, MasterCard, and the like. But Visa reported a great quarter. Windfall profits, great margins, and they're raising prices. So that means they're going to make even more money. Now, the argument could be made there for gouging. There's been a lot of back and forth saying, greedy corporations, this and that. I think in this circumstance with the payment processors, I think there could be a very good case to be made there for gouging because they make ridiculous money. This is always a nice view here. But speaking of credit cards, check your emails for those of you who are just joining us, because at 6 o'clock tonight, I emailed all of you the Behind the Street newsletter. And I wrote about a very disturbing trend that we've been seeing this earnings season as it relates to delinquency rates. So if you scan the QR code, you can read my latest sort of equity research / market outlook report. And I did a deep dive in Bank of America's earnings. I did a deep dive in Citigroup's earnings, Goldman Sachs. I went through all of their financials, and one of the main things I'm noticing, also Discover Financial Services, right? Ticker symbol, Discover Financial is like an entry-level credit card company. They're all starting to see delinquencies go back towards pre-pandemic trend. So Citigroup, their pre-pandemic 30-day delinquency was 3% to 3.25%. Now, in 2021, they've had some of the lowest 30-day delinquency rates ever because everybody was getting the Trump bucks, everybody was getting the Biden bucks, and they were actually being able to service their debts. Now, all of that fiscal and monetary stimulus is gone. So you're starting to see the consumer a little bit strapped here. And I also included some data for small cap stocks and how interest rates impact that. So if you want to read our research piece, go ahead and scan the QR code, punch in your email, and you'll be signed up to receive it every other Thursday after the market closed. So again, we just sent it out. But we'll leave it off there, guys. Thank you so much for joining us tonight on Walks in Wall Street. I want to wish all of you a fantastic rest of the night, and congratulations, we've made it to the end of the week. Tomorrow is Friday. That means we're gonna have a lot of fun. Hopefully we'll be live from Dumbo and we could walk all the way across the Brooklyn Bridge back to Lower Manhattan and check out Fulton Street, the World Trade Center, and 130 William, as well as the South Street Seaport. So if you enjoyed the live stream tonight, feel free to leave a like on the video. Click the subscribe button if you're new, and join us tomorrow, right back here live in New York City at 8:30. If you enjoyed the newsletter, go ahead and leave a like on the newsletter in Substack. It helps more people see the newsletter and it helps us grow. And also share it with a friend or a family member or a colleague. So Optimus 17, appreciate it. MBA Elias, we'll see you tomorrow. The Flag Films, Sharon, Kathy, all of our great moderators, Lady Sarita, Danny Morris, Austin City Limits, Hawaii, Joseph Hardaway, Richard Vogel, Sunshine Hatch, Sunshine After Rain, Colton Manning, thank you, Stephanie, Abdullah, Sally, Kelly Harper, I appreciate you. There's always a bull market somewhere. You just need to know where to look, and I'll see everybody right back here tomorrow in New York. Thank you very much.